Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning from Chicago, traders. Thanks for joining me. This is episode number 2735. We're going to talk a little bit about commodities today. We're seeing quite a bit of movement there. As you might have seen from the tweet for this show, tin futures trading on the London Metal Exchange, the LME, hit limit up at 8%. Oil gapped yesterday on some activity in the Strait of Hormuz. A U.S. Navy ship had to fire on some Iranian fast attack boats. There's the crisis in Iran. Kazakhstan could not produce at the rate it normally does, and so on and so forth. Right now, crude oil has about $3 to $4 priced in as a result of these actions. So we'll look at that today. That's what we're here for. We're starting a little bit later. Just a lot going on this morning. So the first thing I want to show you here is the overall RN RVOL chart. So this table, of course, is telling us how things are lining up, not only in terms of, here are the commodities and where they are, but it's giving us a relative range and a relative volume, which we can use then to detect how active or how unusual versus the last 20 days the current action is. So, there's for example, a big pop up in the ES yesterday on the close back into the full session VWAP and RTH mid and RTH VWAP, but it has since kind of slid down. We have 39 points of range so far today. The overnight inventory in the ES is 96% short on a multi-distribution profile so far, having traded 155,000 contracts, which is pretty much in line with what's expected. Okay, so the indices to me are kind of nappy this morning versus if we look at what's happening with crude, it's up 1%, trading 149% of RN and 121% of RVOL. Gold seeing another pop pushing into 49, 46, 43. Silver at $91. Oh my God, 6% on silver. Pretty insane. I mean, silver is basically a Wall Street bets commodity currently. And we're seeing some movement in the grains as well, and so on and so forth. So there's quite a bit going on in the commodity space. It's really, really hot right now. And the indices and equities are kind of sitting around and humming along as per usual. So that's the key differentiator this morning. One of the things I love to do, because accountability is a big part of trading, is to go over what we talked about in the past, basically what we talked about in Monday's Trader Bite, and look at how that played out. But I'm also conflicted in that I want to keep these Trader Bites as Trader Bite as possible, meaning small, and going into those sorts of details tends to take a lot. So let me cover this real quick. So this is I'm just going straight to YouTube, whatever you guys saw the other day. And I talked about, if the key LIS zone is right in that 6980 to 6990 zone, and as long as it stays below there in the primary scenario, to follow along with the narrative that's happened so far that night, the idea here is that, I might look frozen. This is just the screen, the paused screen on the Trader Bite. I'm not frozen. the idea is any pullback would be a sell, and we would target 69.40. I'd love to catch a trade between 69.80, 69.75, 69.80 into 40. That was the primary scenario. The secondary scenario is that because, and I talked about this, somebody pointed out, well, gosh, it did the exact opposite of what you expected. Actually, I expected either one of these to work out. The secondary scenario is that it pushes through. Why? Because I talked about the fact that that sell-off that occurred right at the open on Sunday night, the open of the futures, was the result of news. You know, the White House is attacking the Fed, and so there's a risk. There's a risk there for the dollar. There's a risk there for treasuries and so on and so forth. And so this being a news-based event interrupting the standard auction movement, the self-propelled auction movement, we have to be very cautious about a scene of the crime return in the trade. And so that's basically what we got. We got a market that just squeezed immediately higher, gave us scenario 2, and pushed right through that key zone. So here's where that is. So when we came in on, the LIS, if you recall, was right here, 69.80 to 69.90. That's where it was. And this thing just opened, poked down 3 ticks, and immediately took off in what was an open drive type open. And in that situation, we simply do not take any shorts. And, we've got the makings of a market where shorts are not likely to pay out. Structured shorts, that is. You could still scalp short term, but the sell card comes right off the table as we push through the LIS, which was in this zone right here, or actually in this zone right here. And so it came back to the top of that zone and then continued to trend up. And then since then, yesterday we had the spike on the CPI, and then it took back the SOC, or the scene of the crime, from that spike. And to me, that's just very, very bearish. Very bearish look at what's going on. I mean, we have CPI coming in better than expected. The market spikes up, and you see the dots there, the collisions taking place, a lot of collisions, a lot of good lifting, and it just stalls out and comes back. For it to come back to the scene of the crime right at the open, that's bad news. That's bad news. And so yesterday, the area I was stalking, the LIS from yesterday, was this area between 1718 down into 708. So 7018 to 7008. And the opportunity showed up and really was difficult you had to wait a long time for it. Showed up here against the mid, the full session mid, and then it finally kind of pushed through and gave us a little bit of an opportunity to trade on the short side, to take back. Remember, once we get into this buying tail, this is what's called a buying tail, or an excess low is another term for it. It's when the market buys on an open drive, and then we come back and we breach that bar, breach that buying bar. This is also an indication of weakness, right? We should not be breaching a buying bar, just like we did here in the CPI. If the buyers really meant business and they meant to stick it out, they should not be giving up that territory. And so that's, so it did that yesterday, and we're doing that again in the overnight session here. So we moved the key LIS down overnight. It is now between 69.85 and 69.76, and we have tested it a couple times so far. And again, we find ourselves in the same kind of situation that we had back here. So the overall look of this morning is very similar to what we talked about on Monday morning, which is, look, we have rejected that CPI news. We've moved down. The thing is, we still have one-time framing up in control. It's down here. One-time framing up, one-time framing up. So the overall trend has not changed, but short term, on a new all-time high, we get this, the usual trend channel down on the pullback. So again, today, I'm going to say the same stuff. I have to come in with an objective view on what's going on. We do have one-time framing up that's broken because we're breaking yesterday's low. That's breaking. That changes things a little bit. I'm skewing to the short side, but if it opens up and immediately busts through this LIS zone, then we are looking at a retest of the prior week's close at 7,005-ish and another run for the 7023 and back into where we started yesterday, right back up here. We take it all back. So if we get back into the range, then we have the prior settle and so on and so on and so forth. So we're going to look for the overnight stat and things like that. So what does it look like here in terms of scenarios? Scenario one, let's get to that. Are you guys following along with all the acronyms and terms and all of that stuff, or are you just very confused by what I'm talking about here? We are talking about an auction. We're paying attention to how, not only what candlesticks or whatever, I'm not really attentive to the candlestick shapes, although some of it gives me some clues. When you have a hammer at the bottom of a down move, things like that, I pay attention to that. But I'm not a believer in time in trading. Just because we get a hammer on the 15-minute doesn't really tell me that the market is done, because on a 30-minute, that hammer may actually be something else. Just like I'm not keen on moving averages, there's nothing wrong with it. You have to put a boundary around the market to be able to trade it. That's a given. But I like to look at the auction, and what I'm seeing here is the point of control. The point of control shifted from there to there, shifted from there to there, and then yesterday it shifted down while one-time framing meaning we were not able to exceed the last low, which means the trend is up. It does not have to make a higher high. It doesn't have to make a higher high. So one-time framing up means that the low has been protected. And that tells you that the trend, the market imbalance, the overall market imbalance is to the buy side. So that is your first clue that you want structured trades long and you want very short-term trades short if you're going to take those. That sets the field for how we're going to approach the market, and it keeps us out of trouble. We don't want to be sitting here looking for, a fib pullback short on a market that's one-time framing up where value and price are moving up. And what I'm telling you here is that's changing. And that's important because one-time framing up, I'm outlining with these little cup things. One-time framing up, the lows protected yesterday. And guess what? It's unprotected based on where we open today. Unless we rally here in the next 15 minutes somewhere up here, and then any selling gets held up and we're not able to breach yesterday's low, it looks like we're breaking a one-time framing. So that's one clue. The second clue is how is value moving? So price is important. We get paid by price movement. But what's almost equally important is how's the volume at those prices moving? And that's the trick. Anybody that trades while ignoring volume at price, I think you're just playing with fire there. So what does that mean? We want prices to move up on value that's moving up. It means that the market is accepting higher and higher prices. An example of that is what we have here in the United States. You know, you have eggs priced at whatever it was, $3 a dozen or whatever, you know, before COVID. Then it goes to $3.50 and $4 and $4.50 and $5 and $6.50 and $7 and $8 for you know, a dozen eggs. I think some areas had them at like $12 or $13. Those, what's happening is price is being accepted, and because people keep consuming it, value is being established at higher prices. Value is being established at higher prices. However, if price goes up to $12 and then nobody's buying eggs anymore, but as soon as it comes back to $8, a whole bunch of people are like, oh, it's discounted, let's go. It's 33% off, let's go buy a bunch of eggs. And we formed this point of control there. Guess what? People are now okay with eggs not being $3. They're okay with eggs being $8. That becomes value. That becomes an establishment of a new price. So for us, price has been trending up, but value has moved down. The point of control has shifted down yesterday despite higher prices. This is suspect. This is suspect. And so as I look at what's happening today, I'm going to lean into that point of control, and I'm going to look for it again. As I know I said this yesterday, Monday. Monday had a news event, and we went back and took the scene of the crime. Essentially, the market said, that news is nonsense, and it came back and it resumed the auction on Monday from where it was. But we don't have such an event today. The market's relatively lackadaisical today, and so we have the same scenario based on the inputs that I just talked about. So that's the primary scenario, is any push into and retest up on the LIS. I'm going to be looking for opportunities to get short, and I just talked in depth, probably confused you a little bit about why, right? The secondary is, you know, we have the overnight low right here, and in addition to that, we have basically the point of control, which for some reason is not showing here. Let's look at what's going on. Let's get these. Not sure why I'm not getting the profiles. I need to look at that. But overall, this may try to respond to the upside, breach the overnight low. And what I'd want to see on the overnight low is, do we get a liquidity check against this high volume area? Do we get in other words, against this this profile and this low? Do we get a liquidity check there and come back? If we do, and then we breach the first bracket's high, then the LIS is likely to go, and then we target prior settle. We target the overnight, which is also the overnight high. We target that, and then we're basically in a market that's just swinging in both directions. And that's your scenario too, right? So those are the keys. If we break down, we're looking for the outer perimeter for the buyers, the last, swing protection area down at 69.40, 69.50. If you recall, had an overnight test, had a day test, held up pretty good. That's 69.50. We call that the mid-century figure. And that's an area you want to scale ahead of if you're short, in my opinion. Here's crude. Crude gapped up yesterday and is running. It's held it's been held hostage against this point of control, which is against the high of the day. Crude is enjoying a weak high so far. Crude, any pullback, just opened 20 minutes ago, any pullback into this LIS, I'm going to look for an opportunity to buy. Once it tests the prior settle, look for a pop-up and a weak pullback to buy crude. Crude has broken the $60 handle, and that $60 handle becomes the buyer protection. You can see there's some energy that went into this, that's where the energy started for this move up, basically a stop run above 60, and it held on retest. So the buyer protection is in that 59.70 to 60.10 area in crude. Right now, the way crude is shaping, it has broken its downtrend line or downtrend channel and is squeezing, and it's got a lot of reasons to squeeze. I'm way over my time. I still wanted to talk about change today. Change is a very important topic, but there's so much to cover that I can't do it. But I hope you're getting something, some value out of these videos, and at least you can see that it's not a matter of coming in and just trading your gut. It's not a matter of just plopping yourself down into a chair and just saying, let me see what happens. It's coming in, looking at the broader picture, and then narrowing down to explain what the context and the current narrative is, and then picking the key prices or key areas that we want to interact in and key targets that we want to hold those to, so that when it's time, we're only executing. We're only executing. So when the market opens, I'm just executing. I'm not looking up, well, what's happening with this, or what level was that? You're flying a fighter jet at Mach 2, and you're sitting there looking at your map, trying to figure out where you want to fly to. You're going to find yourself plastered against the mountainside. That's what'll happen. You do your briefing, you do your flight plan, you know your primary objective, your secondary objective, a tertiary objective, and then you just follow that plan and you react to the facts as they appear. But you have a plan and you're following that plan. Trading is no different. It's a high performance sport. That's why it's very, very difficult for people to succeed. You know, the 90% failure rate's been cited I don't know how many times. I can't vouch for it, but this is the problem. People come in and they see trading as an easy thing. Oh, I've got my trading platform and I can buy and sell, and I've got this money there and I can just gamble it away. All good. You want to gamble it away? All good. But there are other people who are prepared and will only take positions in areas that make sense and follow their plan. Okay? Good luck. Hit the like button. Make sure you subscribe if you're new. We'll talk again on Friday. Cheers, everyone.